Hi, morning. Yeah, I will just go ahead and okay. And last week, I think a recession fear really dominated the market, and until Friday. I mean, it's of course. Yeah, and then I mean, so the non-farm payroll was released on Friday. It's better than expected, up 372,000 in June. That signals the U.S. labor market probably has yet to cool down materially. And of this will set the Fed. Sorry, I'm hearing some echo. Hello. Yeah, and that will probably set the Fed to on track to hike 75 basis point in its meeting. Can you hear me? Seems I have some trouble. In its July meeting, nevertheless, and I mean payrolls are coincident indicator or a little bit lagging anyway. So the money market curve now price in a 75 basis point hike in July and 50 basis point in September, and then another 50 in for the rest of the year. And I think now the market is also expecting the Fed will reverse course and will start cutting rate in summer next year for a total of 75 basis point. And we as actual suspect that the inflation may be more sticky than the market expect. And so although the economy will slow and the Fed will continue to hike rates until something breaks, and the Fed may not stop and reverse course as soon as money market curve is now pricing. So and this week major US data release are retail sales and industrial production and your Michigan consumer sentiment survey. I think we need to watch the 5 to 10 year inflation expectation number also in the US Michigan survey, and because that will tell us a little bit more about how consumers longer term inflation expectation is. And that is actually Jay Powell was pretty much is watching. The recession risk most obviously last week in the commodity market, and WTI crude fell as much as 12% to $95 last Wednesday before it rallied back towards the end of the week and to close at around over 105. That's still down more than 3% for the week. And copper fell as much as 9% to 327 last Wednesday before it paired some loss to end the week at 360 and still down 2.3%. Okay, part of the weakness in commodities on top of the recession fear and also, of course, to the rise in COVID cases in China and mass testing in Shanghai. We as Saxo are still constructive about the secular bull trend in commodities. In near term, commodities, especially industrial metals, are under pressure from US and European recession fear and risk of resurgence of COVID cases in China. But for more medium to longer term, the supply deficit will still dominate and drive commodity prices higher. The bond market last week, however, react to the stronger than expected ISM services and non-farm payroll, and also some talk about infrastructure spending, additional infrastructure spending in China. So yield basically gone up in the US, and 2 years up 27 basis point to 310, and 10-year up 20 basis point to 308. But 210 curve are slightly inverted, so still signaling the Fed will continue to rate hike at least for now, and then but that will slow down the economy dramatically later on. So 210 is a little bit inverted. In equity, and S&P gained more than 3%, and consumer discretionary was the best performing sector. It was up 6.6 in the consumer discretionary sector, and energy was the worst performing, And technology also did well, and Nasdaq 100 was 4.7% higher. And our view is that starting this week, I think the market, we think the market focus will shift towards the beginning of the Q2 earnings seasons. And consensus for S&P 500 EPS growth for the second quarter is about 6% year on year. And I think, I mean, it's because of the low base, and the companies may be able to match or beat the second quarter number, but the challenge really are the forward guidance and comments of business outlook. And that was the most challenging. And then the guidance outlook potentially will disappoint and trigger downward revision for the 2022 full year forecast, which is still at double digit. So that will put pressure on stock price. And the next shoe starts to drop in the US equity, in our opinion, will be a downward revision of earnings forecast for the whole year this year and also for next year. And in Europe, and the dominant risk is the shortage and scarce market price of natural gas, and mainly because Russia is cutting its supply. And it could actually push Europe into a recession, and Germany and Italy are most affected. And if Russia cut its natural gas supply further, German industrial companies such as the Chemical Dry and BASF, they may need to shut down some of their production. They have a huge impact on the global supply chain. And back to Asia, I'm running a little bit of time. And back to Asia, last week, Singapore, India, and the Philippines outperformed, and China and Indonesia underperformed. In fact, it's the first time over the last few weeks, and China actually was down, and CSI 300 was down nearly 1% last week, and Hang Seng was down 0.6%. And even though the stronger than expected Chinese PMI or reduction prospect of a cut in US tariff and so on has failed to push up market, mainly I think probably is because of the COVID outbreak risk, and it's back front and center in the investors' mind. And for Saturday, locally transmitted new cases in China, in mainland China, reached 344, and Shanghai has 57 cases. And on Friday, also Shanghai found the first case of the more infectious BA5. And Macau announced reported 93 cases for Saturday, and the city is shutting down most businesses for 7 days starting today, including casinos. And over the weekend and on Saturday, China's PPI and CPI released, and PPI slowed to 6.1% from 6.4. CPI rose to 2.5% from 2.1. In our view, the rise in CPI and also overseas central bank hiking will limit the room for the PBOC to cut rate. So the main channel for easing is still through pushing bank to lend. China is scheduled to release second quarter GDP this week, and also aggregate financing, retail sales, industrial production. There's a lot of number coming up, and real GDP for second quarter expected to decline on a quarter-on-quarter basis, and Bloomberg consensus calling for a decline of 2.3%, and on a year-on-year basis will be a rise of 1%. And because of most of the lockdown were lifted in June, so the retail sales and industrial production may actually rebound in June, and aggregate financing also will rebound for June. However, and some of those most recent data in July for property for the property market actually decelerate a bit, and according to WIN, the 30 major cities volume growth in daily new home sales actually came down 43.7% year on year during the first 7 days of July. And so, and also according to the China Real Estate Information Corp, and the top 100 developers in China also reported new home sales in volume and value actually came down 50.8% year on year and 43% respectively in June. So in Japan this week, and BOJ Governor Kuroda will make a speech very soon. I think at 10 o'clock our time here in Hong Kong, 11 o'clock Tokyo, and 12 o'clock Sydney. And we'll be focusing on his comments about inflationary pressure, and And then Treasury Janet Yellen will also, U.S. Treasury Secretary Janet Yellen will also visit Japan, and so that will be tomorrow. So will be interesting to see whether she make any comment on currencies when she is in Japan. Bank of Korea is meeting this week. I'm not expecting it to hike 50 basis points. So I mean, Asian central bank are also, except China and Japan, are still in the mode of raising interest rate. And Singapore is releasing real GDP this week, and is expected to grow in the second quarter, mainly because of the recovery in tourism-related industries. I think I overrun. I think I better pass it to Jessica. I stop here.
Cool. We've only got a minute left, so I'll be quick. Just talking about two things. The first thing is some further detail in the downward earnings revisions that we're expecting. So S&P 500 earnings estimates, as we mentioned last week, they're in record territory. So the risk is that earnings estimates don't meet or beat Q2 estimates. Remember, in this time, a share price will likely be driven by either whether a company meets or beats expectations, or they guide for earnings upgrades or downgrades, and that will, of course, affect a company's share price. So specifically talking about the EPS, earnings per share growth estimates, across the S&P 500, 20% growth is expected, but we're expecting big declines in that. The standout sectors that we saw in Q1 will likely continue in Q2. That being said, we're only expecting energy and defence to be the standout. Previously, as we mentioned, Q1, we saw energy and materials give robust earnings upgrades. But now this time in the cycle, we're expecting metal commodity companies to announce a drop in earnings and also disappointment in guidance levels. So that means basically keep an eye on those companies in those areas expecting further downgrades and share price reactions to the downside. Tech, consumer discretionary, real estate also likely to disappoint. Energy are likely to be the standout again. Just finally, just conscious of time, we have to wrap up. Amazon Prime Day, another sign that the confidence or consumer confidence levels will be fatigued. So Amazon Prime Day is on the 12th of July. That's tomorrow in the US. It's the biggest sales event in Amazon's history. And each and every year, new sales hit record highs. But this year, our thinking is at Saxo, it'll be the first slowdown in some time. If you crunch the numbers, we have, so monthly credit card spending is now around half of what its pace was in 2021. Also, remember the consumer is grappling with higher prices, and we're likely to see that continue year on year as long as inflationary persists, and we think that that's the case. Fuel prices, remember that they're up 42% year on year. But all in all, bear in mind, online sales, e-commerce sales are only up 1% year on year, and that's according to the data that was out of the US 2 weeks ago. What are we basically saying? So tomorrow's data in the US, which will be released in 2 days in the Asian session, that'll likely show that the consumer is more focused on in-store sales and also household items, given that food and energy costs are rising. That's pretty much it because we've gone over time. Apart from that, Australian economic growth data, nothing specific, but we are getting employment data out this week, as well as consumer confidence numbers as well, which are important gauges that the RBA look at. That's pretty much it from me. If there's any clients online, please don't forget to reach out to your Saxo RM, your Saxo GST, and refer to our Saxo equity baskets if you've got a hankering for any stock inspiration, or reach out to your closest Saxo rep. As always, have a wonderful week, and we'll see you same time, same place next Monday. Thank you.